Welcome, my friends. If you follow this channel, you already know that layoffs are basically in full-on mode in technology companies. In fact, there has been so much layoff news that I have had difficulty finding time to cover anything else. You have heard about the 50% layoff at Twitter, the 11,000-person layoff at Meta, and the 10,000-person layoff at Amazon, and many others. Today, we hear that Hewlett-Packard, HP, announced cost-cutting measures, including layoffs of up to 6,000 employees. And this move comes just 3 years after HP cut its headcount by 9,000 employees. Management reported weakness in commercial and consumer PC sales in Q3. And they blamed the usual whipping boy, deteriorating macroeconomic conditions. Maybe it is not really just about cost-cutting. Some observers think that big tech companies are capturing the moment to reset company culture. Just look at what is happening at Twitter. When Elon Musk took over, Twitter changed from a cushy country club to a place of 12-hour days working at high intensity. Is this the future of tech companies? Or will we go back to the old way once economic times improve? For now, nobody really knows. Everyone has their own vision of the future. What does it mean for technology companies? What does it mean for Silicon Valley? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Storied computer and printer maker HP announced plans to cut up to 6,000 employees. The job cuts will be spread over the next 3 years. Not surprisingly, shares in HP rose by 1% following the announcement. Also not surprisingly, Wall Street is really rewarding any company that announces layoffs these days. As usual, macroeconomic headwinds were blamed. HP is just the latest in a parade of technology companies to announce layoffs. Facebook parent Meta, Microsoft, Intel, Oracle, Salesforce, and the list goes on. HP is experiencing a deterioration in the sales of computers, somewhat caused by the hangover from the COVID pandemic. When the pandemic hit, people rushed to buy computers to work from home. We expect the changes to result in annualized gross run rate savings of at least $1.4 billion in the next 3 years, HP said in a statement. Approximately $1 billion in costs will be saved, including restructuring, the statement continued. Of that $1 billion, $600 million will come in the 2023 fiscal year, the statement added. The remainder will be split evenly between the 2024 and 2025 fiscal years, HP said. HP currently has 51,000 employees. HP announced that it would 9,000 employees back in 2019. Q3 revenue declined 0.8% as compared to Q3 of last year to $14.80 billion. Revenue in the personal computer segment dropped by 13% to $10.3 billion. And unit sales fell 21% as compared to Q3 of last year. Consumer revenue was down by a whopping 25%. Revenue from printers fell 7% to $4.5 billion and units fell by 3%. So, if there is any good news in these numbers, it means that HP is selling more expensive items. But HP disappointed Wall Street analysts by announcing downbeat earnings guidance. Specifically, HP guided to earnings from 70 cents to 80 cents per share versus Wall Street analysts' consensus of 85 cents. HP also guided to $3.20 to $3.60 in adjusted earnings per share versus Wall Street analysts' consensus of $3.62 per share. If you follow this channel, you know that a wave of layoffs is crashing across Silicon Valley. Meta CEO Mark Zuckerberg very publicly laid off 11,000 employees last week. That amounts to 13% of Facebook employees. Amazon has confirmed plans to lay off 10,000 corporate and tech jobs. Many notable tech companies are conducting layoffs. Lyft, Robinhood, Stripe, Netflix, Coinbase, Intel. They are all downsizing. And they are not just cutting jobs. They are also cutting many of the perks that have become synonymous with tech jobs. Each of these companies have their own, unique approaches to implementing cost-cutting measures. Wall Street investors are looking for safer bets for tougher macroeconomic conditions. So big tech companies are coming back to earth, to say the least. And that means cost-cutting and belt-tightening. The other macro reason for cost cutting that nobody seems to talk about is the biggest tech companies are now mature. Big tech companies can no longer provide investors the same kind of massive growth they could in the boom times. The days of valuation based on the promise of high growth are over. And we are on the brink of financialization of big tech. That means financial discipline, share buybacks, and, eventually, dividends. For 2 decades, Google, Facebook, Amazon, and Apple all had unreal and crazy growth. These big tech companies were selling tons of ads. Apple and Google were selling truckloads of iPhones. The way the world used technology changed fundamentally. Big tech led the charge and was handsomely rewarded for it. That the growth has been reduced to pedestrian levels. Many tech companies are pretty old now, or their main product is pretty old. Don't look now, but the iPhone is 15 years old. Google's main search ad technology in business is 20 years old. YouTube is now 15 years old. Big tech companies are still very big and very profitable. But the stunning growth is gone. Sentiment of Wall Street has changed. The growth of the past 2 decades is hard to find that in big tech these days. Time was when big tech companies were disruptors. Now, they are the establishment. And that does not sit well with Wall Street. And are the big tech companies being honest with investors? Yes, in the sense that they have to report their numbers publicly. But if they say, look, we're essentially going to stop growing, period. Or, we're only going to grow a little bit for a long time, that's game over. Wall Street doesn't want to hear that. Wall Street will say, that's fine. But you're now worth 70% less than what you used to be because we want to get that growth somewhere. Many of the people who started these companies and created the high-growth businesses are not there anymore. Steve Jobs is dead. Many big tech company founders brought in professional managers. Amazon founder Jeff Bezos bought the Washington Post. Bill Gates decided to try to vaccinate the world. But, despite all of that, big tech companies are still the big dogs of American business and Wall Street. I think it's going to be harder for them to get the best and brightest, the most ambitious people, because those people will look around and say, what is happening now is actually part of Silicon Valley culture. It is a place of creative destruction where old things get taken down. New and interesting things get built in their place. It is part of the legendary history of Silicon Valley that has a great deal of truth to it as well. Actually, the real lesson in this is that it is time for Silicon Valley to come up with the next big thing. As you know, Wall Street seems to be driving the change in this phase of big tech. Google employees have become known for a practice, rest and vest. This practice depicted in a fictional TV show called Silicon Valley. But layoffs at technology companies is currently the elephant in the room. Here is the list of companies that have announced layoffs in August 2022 alone. Snap, owner of Snapchat, announced a 20% reduction of employees. This amounts to approximately 1,300 workers. Snap also initiated a major restructuring of their online platform. Apple announced that it is cutting 100 positions and slowing hiring and spending. Oracle, the worldwide software, has cut hundreds of positions but declined to say how many. Most job cuts are said to be in the customer service unit for U.S. customers. Crypto trader Coinbase announced a 20% workforce reduction. Crypto lender Genesis cut 20% of its workforce due to what they call turbulence in the cryptocurrency market. Online stock brokerage Robinhood cut 23% of its employees. This is the second round of layoffs for Robinhood so far in 2022. Connected exercise pioneer Peloton has cut 800 employees, announced several store closures, and raised prices. Earlier this month, Meta Platform CEO Mark Zuckerberg announced the layoff of 11,000 employees. Realistically, there are probably a bunch of people at the company who shouldn't be here, Zuckerberg said. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.